Hi everyone, welcome back to Level Up with Dawn. It's been a while, uh, but a lot of things have changed. I think I've had a lot of thoughts around what we're gonna do with this channel. I still do want to come to you guys and share with you the lessons that I've learned through my investment journey. But I think one thing that I thought, I know I'm rambling a little, but stay with me. One thing that I thought that I wanted to do was to go out into life, learn lessons, and then come back and relay them to you guys, and then have the videos, boom, boom, boom. But I think there is also value in you guys seeing me learn and also learning with me, and seeing me in the thick of some of the things that, in the thick of some of the lessons that I'm learning. But today, what we're going to talk about is the state of the nation. The state of the nation. But more importantly, I think, what do we do now? Like our friend, Mr. Honorable Governor, has been, he's been trigger happy with them rates. And so, as a property investor, that puts us in a very peculiar position. And so, I just wanted to talk you guys through what I've been doing and what I plan to do. Like, what's my strategy going into this high interest rate environment? So, um, during COVID, we saw rates dropping quite significantly, but a lot of that, all of it, has been reversed in the past, I'd say like a year and a half. And now it's like we better than ever in terms of how high the interest rates are right now. Um, and I want to link a video. Like, remember I talked to you guys about, I don't know if I called it the snowball method. I think the snowball method or like avalanche method. I link the video, but these times have truly shown me why the avalanche method is the method that I'm sticking to. I won't even lie to you. I think it's been difficult, like with these rate hikes, but the fact that half of my portfolio is fully paid off and I can earn rent off of that, and that can be a buffer for what's been transpiring on the bond payment side of things, that has really, it's been why are we still standing today. Okay. um in terms of that, I think, because that's one thing that I've noticed going into this, or starting from last year even. I knew like my goal right now is just to pay off debts, pay off debts, pay off debts. And I'll tell you two reasons why. The first reason, like that relief from that interest rate, just because it's eating into your cash flows, it's eating into your expenses. It's difficult to be more prepared when things do go wrong, like if a geyser needs to be replaced, or like an oven door. Like, these are the things going on right now. um when oven door needs to be replaced, all those things, tenants moving out, trying to find a tenant, sometimes you have gaps within that. um but luckily, like this, I'm gonna take you guys, I think I'm gonna do like separate videos. But yeah, paying off the debt to relieve myself from that interest rate burden has been like a major priority for me. So I have a car loan, but I also have my property loan. So my goal has been like get rid of this car loan so that I can funnel that money elsewhere. Also, I've been rationalizing spend. So in certain instances, like if it doesn't make sense anymore for me to spend money there, I haven't been spending money there anymore. And that has been really helpful. And I think I did another video where I was telling you guys about how I'm rationalizing spend. So let that be proof that I'm consistent with my shit. But yeah, so that has been the goal, like paying down these loans, because we want that expense relief. But also, the ultimate goal, though, is that I want more headroom in my um, capital structure, if you may. um, so I want to be in a position where I can borrow more. And even though we are in high interest rates, on a high interest rate environment, I do still see opportunities in this environment. So when we find ourselves in this kind of environment, a lot of people are not in a position where they have a lot of different buffers to help them weather the storm. So you'll see a lot of people are selling their homes in order to avoid foreclosure and essentially like lose all the money that you put into your home, which is like the worst thing I think could ever happen um, in a property space, of course. So you see that a lot happening. One thing that I've been noticing, so there's a neighborhood that I monitor. I think it's like it's my gauge kind of to see what the market is doing or what the market looks like. It's a small neighborhood, but in that neighborhood, if a house goes up for sale, like within a week, it's sold. Um, it would only be maybe the houses that kind of need more TLC, maybe more remodeling and that kind of stuff. Because I think it's quite a family oriented neighborhood, and so people really do enjoy like when there's opportunities to buy into that neighborhood. People do, and it's not too affluent. I think from what I've seen, and also like living close to the neighborhood, it's working class people who is probably established in their careers, but it's not like they can not work and they still afford their lives. Like they still need to work to afford their lives. And so I've been seeing in this neighborhood, for number one, a lot more houses up for sale. I think there would be times where I'd go on there and I'd see, okay, maybe let's say I'll give you like a fake number. Usually there's 100 properties up for sale at any given time. And then like even of those which are up for sale on like Property 24, quite a few of them are showing under offer, under offer, under offer. Maybe even some are sold, but they haven't taken it down yet. So that's like the dynamic that I used to see. Now, when I look for that same neighborhood, same specs that I'm looking for, there's 200 properties up for sale, and less of them are under offer, and they're staying on the market a lot longer. Like there's one house that I've been seeing, and it went up for sale, and a week passed, 2 weeks passed, a month passed. I'm like, guys, this house should be sold by now. Like I found it on Property 24. I looked, I saw the specs and everything. It's like perfectly fine for like a young, not even, it doesn't even have to be young, like an established family to move into, like decent stand size, decent house size, garden, what people would be looking for in terms of suburban life. And it still wasn't sold. So I was like, okay, cool. So that's where the market is going. And since noticing that, I've been seeing reduced. So I was like, I bet. So what is going on now? I feel, or what's what's making its way through the transmission mechanism through these interest rates is people are now selling their houses because they'd rather sell their house than lose their house, and then moving into maybe a rental, maybe downsizing. Um, and because of that, like it's like as much as there's more houses for sale, there are more buyers in the market because interest rates are higher. And on the buyer side of things, banks are more stringent. Maybe they're not more stringent in terms of their credit models for determining if you can afford it or not, but they do want you to have more skin in the game. So maybe getting 100% loan is going to be harder. They're going to need you to like put down at least like 10, 15, and I think that's difficult because now as a buyer, let's say I am in the market, I want a house that's 1.5, right? And I want to get 100% loan because I know I still want to put 100K, oh, let's say I still want to put 200K into maybe painting it up a bit, maybe like a little bit of a renovation here and there, and then also like buying furniture and all those things, right? Um, but now the bank wants me to put in a 10% deposit. That's 150K out of my 200 free cash that I wanted. So now it's like, okay, I still know the standard of living that I want, just in terms of when I go into my home. I don't want to go, shout out to people in Madrid. I don't want to go into my home. I don't want to go into my home and then just be there with like a camp chair. Like, I want to go to my home, buy furniture, furnish it, like make it my home like as soon as possible and like settle into that. So, because now the bank wants more cash up front from me, now I have to adjust what I'm willing to spend on my house. So now it's like, okay, maybe let's take it down to like 1.21, right? Um, so that maybe I do still can retain some. I can still retain some cash in order to furnish my house, maybe paint it and do any little upkeep projects from transitioning over from the previous owner to me as the new owner. Cool, keep that in mind. Now, because of that, let's say there's only 3 houses on the market. And keep in mind, like, there's probably like a lot of economic theory around what is expected to happen. I'm just giving it to you from the perspective that I see it and how my brain understands it. So here I am. There's the buyer, right? You used to be able to buy for 1.5. Now it's like, nah, 1 million. On the seller side of things, there was there was maybe there used to be only 2 people in the market, right? Because this neighborhood was like, people like living in this neighborhood, so they're not going to let go of their house unless, it's like it's somewhere, they're going somewhere awesome, or they really need to downsize. um so there used to be only 2 people in the market. Now there's 4 people in the market trying to sell their house. And their understanding was like, oh, I can sell it for 1.5. I put it up for 1.5. I know they're gonna want it. In fact, I might get a bidding war and like end up selling it for 1.8, right? But now the sellers that these sellers, there's now double the competition. But then on top of that, the buyers who they're trying to attract have reduced their budget, right? So they're there with their 4 houses, chilling, like, where the views? Where are the showings? Who's coming to see you? Why am I not getting any offers, right? Then through consultation with their real estate agent, they drop the price. Whoever drops the price first to 1 million is gonna get my attention as the buyer, and I'm gonna say, "Oh, okay, it's in my budget. It's good quality in a neighborhood that I like. I'm gonna get that one, right?" And now, because that transaction went through and it's a public, you can see like on Property 24, you can see like recent transactions that have concluded in that neighborhood that you're interested in. So you can see that. And I think even the real estate agents, they have access to like LexisNexis and those things. So they can see like, okay, cool, the market is going in this direction. Like, if you are really an urgent seller, like, you need to start reducing. And so I think that's what's happening in the market now. Like, sellers are reducing because they're seeing the buyers' budgets are smaller. And as a property investor, that opens up opportunities for me, right? But then also, currently, as it currently stands, I have bonds that are attached to properties that I'm paying off and that are increasingly expensive. So it's like, um, even if, like, my rental is increasing every year and all of that stuff, like, the expenses are higher. So there's the avalanche or that snowball is being rained on a little bit, right? And so now I'm channeling all the discretionary expenses that I can let go of. I'm letting go of them, and I'm channeling them into letting go of, or completing my debt rather, so that I can get that snowball going. Because what I believe is that we're still at the top of this thing, right? If this is where house prices are going, I think we're still at the top here. So I do think I still have time to reduce my debt. And by the time it gets here, even if I'm like here, even if I'm here when things start, when my debt capacity is at such a level where I can buy again, it's still better than being up here. It's still better than buying here. So yeah, I think we're still at the top of that. And so I know I have time. And so I'm using this time to reduce my debt, increase my capital headroom, so that I can be in a position to scoop up good quality properties at lower prices than I otherwise would have been able to. And on top of that, because some people are downsizing, they're still in the ownership pool, but they're downsizing. But then there's some people who are like, okay, let's just switch over to renting for now. So on that side of things, the rental demand is not really suffering in this kind of environment, I don't think. And so um, as long as I make sure that the asset that I acquire eventually is in the right neighborhood, it attracts the right tenant that I'm trying to attract, then we're good to go, you know? So yeah, like that's what I'm doing right now. Paying off debt like aggressively. Yo, like if I could sell things, if I could sell things, I would sell things. But yeah, that's like the goal right now, to take advantage of that. And I think it's cool. Well, it's a sucky time. I wouldn't even know it's a sucky time, but I think it's cool to have that perspective. And I don't know who else does. And so I wanted to share that with you guys, because if you're already in a position to take advantage of good assets at better prices, do it. Like, I don't think you're gonna struggle to find a tenant. As I was alluding to it earlier, um, I recently had a tenant move out from one of my apartments, and for the first time, I was able to secure a tenant before the old tenant moved out. So usually I don't want to like be in a tenant's space, like I want to give them their space to like move out and whatnot. And then like I'll take a month to like find a tenant. So it will be like a month of a vacant property, and then the tenant will be placed that second month after the original one moved out. But I was able like back to back to put a tenant in, and this is not in like an affluent neighborhood. So it's like it's another form of confirmation for me to say the rental market, as long as you are still, properly checking the credit quality of your tenants, making sure that they are actually in a position to pay, um you can do well. You can do well, and you can get a tenant. But also that's very asset dependent. But yeah, that's my strategy for the medium term. I've already like started looking at properties. I'm like venturing. I want to venture into a new neighborhood. Because I've rejigged my portfolio a bit. I'm skewing my portfolio towards a different type of tenant now, especially with the whole, work from home and whatnot. So um I want to do videos on that for you guys. Like, I want to do like you with me on Property 24, and I'm telling you my opinions on properties. One thing that I do like to do though is, if there's a neighborhood that I've identified that I think I want to get into, one thing that I do is I compare asset value against the rental that I could get. Um, and some neighborhoods are surprising. Some neighborhoods are so surprising at like the rental you could get considering the value of the asset. But then that's also it's a function of what's in that neighborhood. It's a function of what the tenant cares about, and depending on what the tenant cares about, they are willing to pay premiums to be close to certain things. um but yeah, I hope you guys have been weathering the storm well. If you feel comfortable, let me know in the comments, like, have you had to rejig your portfolio? Have you started your portfolio in this environment? Have you tried buying property in this environment? How's that been for you? Whether it's like for you to live in, or it's for um, you to use as an investment vehicle. I'm interested to know. But yeah, it's been rough, but it's also, it's, I think, no matter how one, at least I guess, living in this world, living in this economy, I can understand that even if I feel like I'm losing in something, I know there's a win on the other side of this loss. And so I can adjust myself and I can orientate myself to be on the winning side of it, you know? And so I hope this video helped you. If maybe you trying to figure out, okay, I'm trying to grow, what am I going to do now? Maybe this helps. I hope it does. Say hello in the comments if you'd like to. And if you enjoyed this video, don't forget to like it and subscribe to the channel. And I'll see you in the next one. Bye.